So I have a conspiracy theory, folks. For every £1 that Craig Irwin has lost in the last 12 months, he's gained about 4 or 5 IQ points. What do you think? This is the same guy who repeatedly said, and I quote, that Tesla stock was egregiously overvalued. That's a direct quote. And that Tesla didn't have anything that Toyota didn't already have. Also a direct quote that he repeated many, many times. And yet, here we are today. The title of this video caught my eye. Tesla can surpass Waymo very quickly. I mean, yes, that's true. But coming from a long-term Tesla bear who suddenly did a massive 180 almost overnight, look forward to this one.
All right. Well, let's zero in now on Tesla's stock. Joining me now is Craig Irwin, Roth Capital Senior Research Analyst. He's got a buy rating, $395 price target on the stock. Craig, I want to play a soundbite for you from the earlier part of we don't have it? All right. Well, one of the things that Elon Musk talked about was a model for self-driving and a service along with it that's a combination of Airbnb and Uber. In other words, people would be able to lease or buy their car and then rent it out to self-drive and drive people around. How likely is that in the way that you're modeling? And how big of a disruption to the entire industry would that be?
So it's in the hopes and dreams. It is not in the financial model. So that would be tremendously disruptive. That would be, a straight path to wild success of his autonomous initiatives. So, it's something he's working on. It's something he's put a lot of passion into and a lot of engineering dollars behind. But I don't think Wall Street's expecting that before the end of 26 or probably even before the end of 2030. Maybe 2030, we some people are expecting it, but I think consensus expectations are that we have a car that actually works better than Waymo on the road pretty soon, right? Small number of weeks. And he set the expectation, hundreds of thousands of cars by the end of next year. I don't think anyone was expecting that. I think, tens of thousands is probably more in the range of what Wall Street's been looking for, which would be a fantastic success. So the whole idea of like an Airbnb-like app, that's Musk stepping into the picture, pointing at, really where he wants to go and where he's spending his time to actually handle the problems to get there.
So some context, almost a decade ago, July 20th, 2016, Tesla's Master Plan Part 2, the summary of which included this final line: enable your car to make money for you when you aren't using it. So to be clear, this has been a long-term goal of Tesla's, directly in line with their mission, by the way. If you can essentially subsidize or completely cover the cost of owning a Tesla vehicle, more people can afford them, and you further accelerate the world's transition to sustainable energy. Now, Craig makes some interesting points, and it's wild to hear this same motherfucker. 12, 18 months ago, Tesla doesn't have anything that Toyota doesn't already have. The stock is egregiously overvalued. And now talking about even a few tens of thousands of autonomous Tesla vehicles being a huge success. Also pointing out that most folks on Wall Street aren't even modeling autonomy. And those that may be thinking about it still have years and years before any meaningful number of Tesla autonomous vehicles are on roads. A little bit of additional context. Today, Waymo has well under 2,000 vehicles on roads, period, total. If things go to plan, Tesla could have well in excess of that number by next year. So can confirm, Tesla can surpass Waymo very quickly. It seems evident, though, that most investors, at least those with very deep pockets, do not believe this is going to happen. As I've said recently, a promise and an estimate are not the same thing. Elon Musk has estimated that by end of next year, which is about 18 months, Tesla could have hundreds of thousands, potentially approaching 1 million, quote, Robotaxis, most of which, of course, will be existing Model 3s and Model Ys participating. There's absolutely no chance that any folks on Wall Street, based on current price targets and fair valuations for Tesla, think that this is possible. Not even a fraction of this number. It does sound pretty aggressive. And just for context, I'll have a look at my Tesla valuation model now. If you'd like to peek, check it out on Patreon. Join at the investor level and above. When I first published this in 2021, I estimated late 2024 would burst Tesla Robotaxis if they managed to launch in June, motherfuckers. Being off by around 6 or so months, I'll definitely be patting myself on the back for that. So in my base case, as I record this, and my Patreon subscribers can all check from the latest version of the model, which I haven't touched for a while, I have over 100,000 Tesla Robotaxis operating for the full year in 2026. The bull case is over 500,000. Of course, I don't know what's going to happen. That's why I have a bunch of different scenarios, which I weight by probability. But I want to explain the significance of reaching this kind of scale, the difference between 10,000, 100,000 and a million. We'll do some really rough back of the envelope math here. Assume Tesla is charging $2 per mile and they have a 25% profit margin, meaning they make a profit per mile of 50 cents. And we assume that each Tesla Robotaxi, on average, does 50,000 miles a year, which is less than a full-time taxi, but nice round number. That's $25,000 in profit per full-time Tesla Robotaxi per year. If you have just 10,000 of these on the roads, you bring in $250 million in profits. 100,000, I mean, the math's pretty easy here, right? Just add a zero. You're now at $2.5 billion in profit from just 100,000 full-time Robotaxis. But when we hit that million point, brother, $25 billion of profits. And that's assuming $2 per mile, 25% profit. So 50 cents profit per mile, and you've got a million full-time Robotaxis operating. $25 billion in profits. That is a stupidly large number based on very reasonable estimates. Now, I'm not saying that many miles per Robotaxi. I'm not saying that's how many Robotaxis. I'm just telling you, if they make 25% profit, $2 a mile, that's 50 cents a mile. Do the math. So back to my point. No one thinks this is going to happen, at least not in a reasonable time frame. If they did, trust me, the big institutional investors, the pension funds, would be loading the fuck up on Tesla stock hand over fist like you would not believe. The most important factor though, Tesla already has over 7 million vehicles on roads that in the future, with an update, over-the-air software and potentially a hardware upgrade if they can't be fucked, getting latest versions of FSD working on some of the older hardware, an upgrade at Tesla's expense, by the way, can begin participating in this network. And of course, they're producing close to 2 million vehicles a year at the moment. So that number's going to keep going up and up and up. Now, obviously, not every existing Tesla owner will be interested in participating in a Robotaxi fleet. But boy, oh boy, it's going to be a pretty tempting proposition for many folks whose vehicle spends most of the day and night parked as opposed to going out and making their money passively. The point, Tesla already has a massive scale. Never mind the Cybercab, which will be cranking off production lines at very fast rates. Volume production, not too far away. Not only does Tesla already have a massive fleet, a global fleet of vehicles that can possibly operate autonomously, but they've developed a generalized form of autonomy, which means that getting this software operating effectively, safely, globally is trivial relative to having already gotten to the point where it's at today. And again, investors don't get this, or they don't believe this, because if they did, if they thought, oh shit, they really do have a generalized form of autonomy, it's going to scale really widely. They've already got millions of vehicles on roads, and also expertise in mass manufacturing affordable electric vehicles at scale, meaning the Cybercab's going to fly off production lines. Holy shit. If investors truly believe this, as I said, Tesla would not currently be a roughly $1 trillion market cap.
My understanding of what he said was hundreds of thousands of cars that would be full self-driving capable, not necessarily in that network.
Yeah, nah, bruh, no. Jesus Christ. Tesla's already got literally millions of vehicles on roads today that are, quote, full self-driving capable. What Musk was referring to was a number of vehicles that will legally be able to operate autonomously, e.g. FSD unsupervised, just to be clear. And if they can legally operate unsupervised, they can obviously participate in the Robotaxi network. Musk wasn't referring to vehicles that will be capable of operating autonomously. There's already 7+ million of these things on roads. Again, the estimate was clearly, obviously referring to the number of vehicles that will legally be able to operate FSD unsupervised on public roads.
And doing rides, but in your view, I know you got a $395 price target and a buy on Tesla right now. I think that's right. Is Tesla better off now than it was before November based on these moves that Elon Musk has been making in government?
So I will say today you had Elon Musk at his very best twice, right? You got to see very clearly why the investing public is a big believer in what he reaches for, right? This is a man that's done it successfully, transformed the future of transportation, check. Right. So now, everybody knows PayPal and his other successes behind him. But,
So I just have to take a real quick moment to let this one sink in. God damn it, dude. Every time I see one of these on screen, I always like to take a note. Remember when Tesla's stock had shit the bed? Remember literally a year ago, the stock's like $180 a share. Prior to the election, just over $200 a share. In March this year, just a couple of months ago, just over $200 a share. At that point in time, I distinctly remember noticing how many gigantic pussies were recommending hold, how few were at buy. Suddenly stock surges, nearly doubles, and then, oh yeah, buy Tesla stock. Call me crazy, but at least in the case of Tesla, I think on average, the analyst recommendations for Tesla stock are a lagging indicator. If the majority are recommending hold, history seems to indicate that the stock's probably going to move higher. And in almost every case, when the majority are recommending buy, the stock has surged, probably doubled in the last few months. I think there's two reasons for this, two factors at play. Number one, the entire convention of 1 year price targets is so dumb. As we know of the short term, which yes, 1 year is short term, the stock market is a voting machine. It's all sentiment driven. It's far too short a time frame to reasonably see true value recognition in a company. Tesla stock, case in point, 2014 to 2019, just over half a decade, the stock went nowhere. There was a period where you could be buying Tesla stock in 2019 for about 25% less than you were paying more than 5 years earlier. Then, out of nowhere, stock surges, does roughly a 10x almost instantly, and then history repeats. Another almost 5 year period where the stock has gone essentially nowhere. Yet, during those near half-decade timeframes each, while the stock was flat, the company was anything but, moving further ahead, scaling massively, printing billions of dollars. I mean, this in and of itself is a clear enough example of the distinction between what investors are paying for a stock and what the underlying asset, the actual company, is truly worth. In my extremely unhumble opinion, every analyst should be publishing a minimum 5 year fair valuation for companies they cover, not 1 year. If you're looking only a year into the future, this is how you miss massive transformative disruptions. But the other factor is analysts aren't actually paid on successful recommendations. They're salespeople. They're paid commissions based on business they bring to their firms. So the goal there is to get your face in the media, be everywhere, bring in business. So how'd you hear about us? Oh, Craig Irwin said Tesla doesn't have anything, Toyota doesn't already have. Next minute, Craig Irwin makes some money. So the entire incentive structure is completely ass-fucking backwards for analysts. So it's no surprise that you see the chasing behavior. Stock surges, suddenly analysts increasing price target because stock went up. I mean, because, we need an excuse for why we're increasing our price target beside the stock going up. Can somebody give us an idea? Okay, let's just say because some of the parts valuation. What? But this chasing behavior, it's par for the course. Where are the 5-10 year valuation models from analysts out there? Where are their estimates for Tesla's first Robotaxis back in, say, 2021? What year were they expecting them? Oh, wait, that's more than 12 months into the future, not allowed to even consider that possibility. But of course, my brain's nowhere near big enough to be an analyst, so I just look 10 years into the future. Then I look at today and think, is this a deal? 10 years down the track, will I be glad I bought today at this price? And the answer so far has always been yes, so I just buy. So if I was an analyst, I would have literally had a buy rating on Tesla for the last decade straight.
When we look at his vision of Occupy Mars, heck, people forgot that this is the guy that rescued our astronauts from the space station after another launch partner had actually failed to pick them up for, many months. So, people are starting to see his vision, how he's stepping into it. This is very good for Tesla. It's good for the overall enthusiasm around this company. Mm-hmm. And it's an emerging growth type valuation on this stock, given the massive size of Optimus and AI and autonomous. And, that means we need indications like this.
What about the way investors should measure Robotaxi success? I believe what Elon is saying is 10 Teslas in Austin operating a Robotaxi test network by end of June, ramping quickly from there. Waymo at the same time has authorization now to move down the Bay Area from San Francisco through the peninsula into San Jose, which is a huge population by comparison. How much is that comparison going to start coming into play and the rates of expansion rides done once Robotaxi does kick off?
Hugely important. You're spot on the money. So the analysts that follow Google, that look at Waymo, say the valuation there is in the tens of billions. They've only got 1,000 cars on the road. People don't talk about it, but they have 2 to 3 teleoperation engineers on every vehicle. That's 3 guys in the back seat with a joystick, making sure your ride is safe. So it's not a driver, quote unquote. But, Tesla has said today that, yes, they will have remote operators on their vehicles. They're going to have zero tolerance for failure. They're going to have zero tolerance for accidents. And they're going to do this in a safe way for the public. So I think Tesla can surpass Waymo very quickly, given their experience of having millions of vehicles on the road with, lower levels of autonomous and the complete control over the integration of the cars, and the fact that there's been years of planning that have gone into this. What's gone in recently in this last year is more of an aggressive push, and that was what was needed.
So I've got to say, it still spins me out hearing Craig Irwin Tesla doesn't have anything that Toyota doesn't already have. Tesla stock's egregiously overvalued. Saying things that actually make sense and are reasonable about Tesla, and discussing autonomy, which, by the way, Craig, Toyota definitely doesn't have. I still don't understand what caused Craig's 180, unless some of his colleagues sent him a bunch of clips of me roasting him, and he go, oh, that motherfucker's got a point. That did not happen, by the way. But the broader point here is most folks are still living in past Craig Irwin land and really don't see what's around the corner. The title of this video is Spot Fucking On. Tesla can surpass Waymo very quickly and will. If it's true that Tesla can, by the way it is, surpass Waymo very quickly, it also means that Tesla's profits are going to scale very quickly. And I have a prediction. As the penny is starting to drop among analysts on Wall Street, oh shit, they really are scaling the Robotaxi fast as fuck. Holy fuck. Damn, that's a lot of money. Shit. Lost in the noise? The frantic increasing price target by $300 per share because Robotaxis, holy fuck, will be the massive progress happening with Tesla's humanoid robot, which at scale is going to dwarf the profits of autonomy. History doesn't repeat, but it sure does rhyme. Last half a decade plus, analysts myopically focused on Tesla's automotive business. The narrative previously was Tesla can't make money, they're going to go bankrupt, the competition is coming, wait till the big boys arrive. Then Tesla does start printing crazy amounts of money, and is currently the only profitable EV manufacturer on Earth today, at massive scale, with a huge technological lead that's further accelerated. Then we have the scamdemic, the futile, fascist, inhumane shutdowns, the crazy financial stimulus, sky-high interest rate, and suddenly the narrative shifts to, oh, consumers don't want electric vehicles, there's no demand, sales are collapsing, Tesla's fucked, Elon's a Nazi, all this. Right? And this entire time, autonomy was building in the background, yet completely ignored because people were focused on last decade's news, the vehicle business, and not even understanding that. This is going to be round two, when investors start to grapple with and then get their heads around autonomy. In the background, Tesla's going to be manufacturing humanoid robots. They'll have hundreds, then thousands of them working in their own factories, and soon after that begin selling them to customers. Warehouses, factories in manufacturing, then eventually scale well beyond that. And of course, the narrative is going to be, oh, the humanoid robot competition's coming, or there'll be no profits in this business, everything will be commoditized, or Tesla needs to buy Boston Dynamics. Story of Tesla's life. They continue to plant seeds, to nurture them, seeds that take years to germinate, and then suddenly out of nowhere, bam, and investors ignore this until they're reaping the fruits. So put a pin in it, folks. The new shining object will soon be Tesla autonomy, which will cause most investors to completely neglect what's happening with the Optimus humanoid robot, which, as I've said, at scale, useful and increasingly intelligent and increasingly capable humanoid robots. The profits that will be generated from this will make everything Tesla's existing businesses, including electric vehicles, energy storage, and autonomy at scale, make the profits from that look like a rounding error. P.S. June, motherfuckers. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, it has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.